person I've got on the hot seat today, none other than OYO founder Ritesh Agarwal. Ritesh, good to see you safe, good to see you healthy. I'm sure you're sick and tired of asking the question, but I am nevertheless going to begin by asking you this. You're personally safe and healthy. How safe and healthy is OYO? Will it survive coronavirus? Is it going to be around post COVID 19?
So first off, thank you so much for having me here, Nayantara. I know this is taken longer than it should have for us to get together, but as you know, the last couple of months, we wanted to spend as much time with our team members as we could, and we've tried doing so. I hope you're safe and healthy as well. I'm thankful that so far, so good, and as good as you can be in these times. I think OYO, of course, is in the hospitality industry, which is one of the most impacted, as you know. But that said, from our perspective, it is important to recognize that the travel and hospitality industry not just is impacted now, will remain impacted for a significant period of time. But that said, OYO is going to be here for the long term. It will continue to invest in the right kind of technologies and competencies. And hopefully, when the world comes back, I don't know what will be the structure and form in which hospitality and travel grows. But regardless of what that form would be, I'm confident that OYO will not just come back. It will, once again, the sunny days will come and we will thrive again.
You're waiting for the sunny days to thrive again. Now, there is no doubt that hospitality, tourism, travel is the worst hit when it comes to coronavirus. People, are now scared to travel. People are scared, and they may not even have the money going forward as well to take the kind of holidays that they were used to. Companies have now gotten used to Zoom calls, Microsoft Teams. They're going to think 3, 4 times before sending anybody out there for a face-to-face business meeting. My big question, of course, also then is how are you going to reposition OYO? Luckily you were at least in the budget category, but even there, will you have to relocate?
Sure. Look, I think it's important to contextualize that very similar to how 9/11 fundamentally changed the aviation and hospitality industry, where we are now used to getting our shoes off in immigration and security checks in a lot of countries. We are now used to ensuring that airlines are flown and security is managed in a certain way. I believe COVID and its impact will fundamentally change the way hospitality will be seen in the years to come. And one of those things may be, as you're saying, work from home and similar preparations. My perspective is for the consumers in the new world, experiences will be fundamentally different from where they are today, at least until the time where vaccine or similar treatments are found. I have been in the last 2 days been visiting OYO hotels and taking stock of our preparedness. And in that process, there are multiple things that I'm seeing as becoming normal in the new world. For instance, ensuring social distancing signs at the lobby area, at the corridors, and so on, in the form of circles where people can walk so that people are always following social distancing. Zero touch in the form of no touch for accepting key cards, ID cards, food at the room service, and so on and so forth. Payments being highly promoted in the form of digital payment programs, sanitization and checks of sanitization being pasted in each part of the entire hotel experience. Being able to make sure you have higher bandwidth because more and more people will try to have video conferences even if they are in their hotel room. Medium to longer term stays. So we believe fundamentally, even though economy segment will come back sooner than other segments as we have seen in China and Northern Europe, we believe fundamentally experiences will change than ever before. It may mean lesser amount of corporate business demand, but it may mean more driving holidays rather than that of flying holidays in the times to come. So we will, I believe, domestic and economy will be the two catchwords in the relatively smaller segment of travel that will remain in the future.
Vocal is local is vocal, forget global, huh?
No, I believe, when I was listening to it, I genuinely, I was remembering, one of my presentations at the Startup India Summit a few years back, where Honorable Prime Minister was also in the audience and had shared we aspire to be a company that is designed in India and made for the world. We are very, very happy to see that the Honorable Prime Minister of the country is making people vocal for local. And we believe this will bring a substantial boost, not just to us, but to the broader local brands being built out of India. And hopefully, the size of stimulus will ensure that this is not a stimulus made for just protection. It's not a stimulus made for people to be on their own 2 feet. It's a stimulus to get people on their 2 feet, but then run. And our hope is that will go to the MSMEs of this country who really are the backbone of our businesses. For our business, it's small hotel owners like Mr. Anmol Dheer or Mr. Raj across India who are all trying to make sure that they see through this crisis. My sense is they will not just see through this crisis, but actually invest in the future with the size of stimulus that may come for the small and medium-sized businesses.
Absolutely right. Like he also said, and there is going to be a big drive now for going local. And you started seeing signs of that as well with the FDI rules, for example, where, they made it clear that investments in of course, was targeted China would be pre-screened. Ritesh, can you tell me how the startup community and you in particular reacted to that? All of you have massive exposure, not to just doing business in China, but also for having large Chinese investors. And this is perhaps going to be the big global theme. You've got Donald Trump now talking about how, the state-owned insurance companies should no longer be investing in Chinese equities. You're seeing a big disruption globally as well.
I think, the first bit is you will see that good companies will continue to get capital. As you saw recently, Geo has shown a very strong path to bring significant amount of FDI, and I feel there will be more of it in the times to come, regardless of which country it comes from. The second bit you will see is more domestic investors because there will be significant focus on growth, especially given the significant amount of stimulus that may come. And the third, I believe that consumers and the trends will dramatically change. The tourism ministry recently came up with a program for Bharat Dekho. I believe that this will mean more and more people, partly because of safety checks, because people don't want to fly international, and partly because we have a sense of confidence or reliance for our domestic markets for trying to see how we can give back to our economy. So people who do travel at all will probably travel more domestically. I recently said something in this direction, which has been covered a lot, which is Kodaikanal will be the new Switzerland and things in that order. And it's gotten quite a bit of coverage, even though I meant it more from the perspective of there will be more domestic travel in the times to come.
So Kodaikanal is going to be the new Switzerland. Give me more insights. What are you seeing and how are you realigning your business then accordingly?
Sure. Look, I think for OYO, we are lucky to operate a global business. I shared this a little while back that OYO's revenues are very substantially impacted to the extent where we last publicly discussed that our revenues fell by 50 to 60% and may get worse. But that said, I think we are starting to see in the month of May or early trends of recovery in some parts across the world. I think China is the first market that got impacted for us in early part of this year. But we are starting to see some early signs. Even though it's not a V-shaped recovery, we are seeing slow but certain signs of recovery in China. Our occupancy has now risen up to the mid-40 levels. Pre-COVID, it was around 60 plus. So we hope to be able to get back to pre-COVID levels in the coming quarter. The second perspective we've seen is Denmark and broader North European region. We have seen that in Denmark, as I was explaining, that people are getting very sensitive to contributing to their national economy. So, for instance, earlier we used to see only half of our business used to be the Danes, and then half of the business used to be the Dutch or the German customers. Now we have seen the Danes are contributing almost all of the business as we speak because the Danish borders remain closed. But that said, the revenues have not fallen so much in comparison to the pre-COVID levels. There is a strong recovery that we are able to see in Denmark, for instance. So we are able to see that people have a sense towards local across the globe. But I hope, of course, the being vocal for local will be a great value addition. Technology will play a big role. Hotels will need to use technology for ensuring they can operate more efficiently. So OYO is actively working to provide new technologies for our asset owners to operate more efficiently. And what our hotel partners are seeing with that is their break-even levels of occupancy is reducing from say 40% to 30% or 25%. And in a new world, that will play a big role for their income. And last but not the least, for our asset partners, one of the big challenges for asset owners who are leasehold owners, not really own the hotels, for them to be able to engage with their property owners and get a reasonable lease is very critical. So we are helping our asset owners with data to be able to predict what can be the fixed lease and what can be the variable lease. So the underlying asset owner wins, our hotel owner who's a lessee wins, and if both of them win, OYO will of course have a more sustainable return in the years to come. So technology, capital efficiency, and making sure that you can take all your stakeholders together is going to be the need of the hour. Beyond from the consumer side, like I mentioned, on the demand side, local and domestic, along with economy, will be the big trends.
It is really fantastic to hear. And I think every country is going to start looking inwards. You said that you started seeing recovery in China. It's not V-shaped. You're hoping to be back at pre-COVID levels this quarter itself. That's really huge. But like even pre-COVID, you did have a tough journey, Ritesh. You're so young, and you've had to take decisions uh, without a heart, literally, right? And it must have been heartbreaking to have those layoffs, announce the furloughs, cost-cutting measures. It's always heartbreaking to do that. How was that for you? Did you try and delay the decision as much as you could? And is the pain over? Do you think you've taken all of the tough decisions, or you managed to hold off something that let's see if things improve, then we can hold off to this?
Sure. Look, to begin with, I think I was telling this to somebody that we had made some changes in January, which were like you mentioned, they are very emotional because you make a certain decision with a longer term view, but there are situations that change, which unfortunately lead to making some of these decisions which are not fully in our hands. We try as much as possible to bring our teams into the picture as we make some of these decisions. And we were starting to see a significant amount of recovery by the end of Q1 in most markets across the world, other than China. And then COVID hit us. There's a good news and there's a bad news about it. I think the good news is we are a much stronger fundamentals-led company than we were a few months back. And last 6 months, the path of moving towards stronger fundamentals by means of focusing on our customer experience, getting closer to our partners, getting our economics right, I have seen very strong improvements there, which gives me more confidence that when the world does come back, like I was saying, we move from the overcast to the sunny days, hopefully it will help us. But the tough news about it is COVID is a situation which is, the catchphrase is unprecedented. Nobody knew or knows how to react to it. You're just reacting as best to the levels that you're hearing from your management, your board members, your shareholders, and so on. And we have tried to respond to it with similar perspective. Our view has been no or negligible amount of job losses, ensuring that we can give people the time to be able to ensure that to the extent there is some improvements we see, hopefully we should be able to bring back at least some of our people back to work. With that perspective in mind, I think at this point of time, the decisions are dynamic. That is, countries which are more impacted we have unfortunately have had to take higher amount of decisions on furloughs, and countries which are lesser impacted, the decisions on furloughs have been lesser. With changes which are positive, we hope that we don't need to make any more decisions in the future, at least for the next few months. And we are seeing very positive results in terms of very little but certain green shoots. To the extent those remain, we may not need to take a lot of tough decisions going forward. But our view has been being transparent, constantly talk to your people and be able to communicate with them. We were the first company that went on record mid of April and talked about the revenue impact, the opportunity, and the challenges in front of us. We will continue doing the same. Empathetic, ensuring that we do the best for our team members, right from ensuring ex gracias, medical and healthcare benefits, shares being issued, and things in that order. And the third is making sure that we have empathy, because look, I think no matter what you do logically, it's important for the individual who's getting impacted for us to continue to have a constant communication on both sides. And that's what we will intend to do in the future as well. But like you said, I think none of these are easy decisions.
In fact, Ritesh, I have to say this, when you talk about empathy, you talk about being transparent, being one of the first people to talk about the hit on revenue. I should also point out that you were one of the first founders to also say that I will not take salary, and that must also be applauded. You're so young. Are there many more who, have age on their side? Of course, they're dealing with a black swan. They don't know how to do it. They took longer to take, to announce such decisions. So kudos to that. But, on a personal level, it must have been really, really tough. Was it your board that insisted on it, or was it you realized that you had no other choice? Were your investors demanding it?
So I can run you through how we thought about our cost structure, right? I think the first thing we did was reduce all the controllable costs, which is capex, marketing, and so on and so forth. A couple of months back, we had started to do some of these when we started seeing the impact in some of the countries. My view was, before any individual gets impacted, the first person who should get impacted is me and then my management before any individual would get impacted, even if those are in the form of furloughs. I think hence it was a no-brainer of sorts. It made complete sense. And of course, our board got to know it at the same time when the world got to know it. So it wasn't as if there were any discussions in advance. Because honestly, the board has been focused on building a good business for OYO rather than anything else. And for me, I have always believed in the long-term success of the company. I have never sold a single share in the past, and I would not until particularly required at any point of time, because I'm genuinely a believer in OYO's long-term success. There is, of course, some short-term blips that we'll face.
Shares.
Sorry?
You bought back shares. Forget selling. You bought back shares.
Yeah, so I remain convinced about the opportunity of OYO. Now, of course, we have significant impact right now. I'm happy to acknowledge it. But at the same time, I can tell you that the OYOpreneurs are actively at work. And when the sunny days come, the current and the past OYOpreneurs are all at it to make sure that we come out stronger and the company and the brand we all dream to be.
For the sun to rise, will you have to take more decisions? Like, for example, does OYO need to be in Las Vegas? Are you going to look at new geographies? I said Las Vegas as a hypothetical situation, but are you looking to maybe exit geographies that, you don't need to be in anymore? Are you willing to acknowledge that maybe you grew too much too soon?
Sure. Look, I think there are three perspectives to that answer. The first one is we will absolutely prioritize our time and capital across geographies. We are happy to share that from a consumer and from a partner side, we have seen great positive reaction across the globe. For instance, you mentioned about United States. In the United States, we continue to see great improvement in RevPAR between April and May, especially with the southern and the southeastern states opening up. Texas opened up just a couple of weeks back, and we're seeing great results of that in the Houston hub, which is our biggest hub in the United States right now. So from our perspective, we do not have any plans of exiting any geography. But that said, we will, of course, invest more in geographies where we get shorter term results, but we will continue to invest in the long term for competencies across geographies. The third bit is talking about specifically about our Las Vegas asset. I want to clarify that the Las Vegas asset, OYO's exposure in terms of total capital is less than 10% of the asset. It is an acquisition which is primarily by a fund which has other shareholders, private equity firms, and so on. OYO's primary job there is to be the revenue management company which would ensure that we create long-term value for the asset as a hotel operating partner rather than that of an asset owner. And globally, 95% plus OYOs assets are primarily in asset-light revenue share sort of contracts.
I said I took Las Vegas as, of course, a hypothetical example, just to figure out you need to be in the geographies. So it's good to know you're not looking to exit geographies. In fact, wow, you're looking to invest more. So can I ask you, Ritesh, where is this money going to come from? Because if you're declaring losses, your revenues are going down. I think there's going to be obviously a markdown in valuation for everybody. Your last publicly disclosed valuation was $10 billion in 2019 after the last fundraise. Where is all this money going to come from?
Sure. I want to clarify that when I said, we will invest more, what I meant was relative, which is we will relatively invest more in our core geographies where we are going to see shorter term returns, and we will invest relatively lesser in geographies where we see longer term returns. But that said, I think any of those investments will be lesser than the pre-COVID times because, like you shared yourself, that is, our revenues have plummeted by 50 to 60%. As you know, our company has a balance sheet of a little over $1 billion today, which, believe it or not, is a sizable amount of capital. Our hope is to make sure that, it is sizable form of capital or it is limited capital, depending on the way you look at it. So if you're able to make sure that you're giving the respect that that capital deserves, you can sweat that out for a long period of time. But if you are not disciplined, then it may not remain for a long period of time. We intend to be very disciplined, especially given the impact in our industry, to make sure that we utilize the capital well. But remember, we will not do it by compromising on our values, and we will not do it by compromising on the respect and empathy we have for our OYOpreneurs. For me, my values and our respect for our OYOpreneurs comes much before any of the economic constraints, because we believe if we are able to hold up to our values and our empathy to our OYOpreneurs, regardless of some of the uncontrollable tough decisions we need to take, we believe we will be a long-term successful company.
You didn't answer my question. Do you want to tell me what the markdown could be, and what is the average markdown that you're seeing in Startup Street? If you've got $1 billion on your balance sheet, you should still be in a relatively better place than a lot of your other peers in the Startup Street. But there's so much negative press about OYO. Is it because you're in the travel industry, or because you've been transparent about your revenues and tough decisions on human resources?
Sure. I think our job is to make sure that we are transparent about our matrix. As you may have seen, we have announced our revenues, gross margins, EBITDA, including our financial filings every end of the financial year once we have filed it with the government authorities. We will continue to be transparent about all of those details. But that said, I think our view is valuation is not our job. Our job is to focus on our customers, give them an experience where they get a zero-touch, high-quality experience. Our partners who potentially could get the basic returns that they need to get, and our employees making sure that we are transparent and we are working with them for their future. Post that, all we can do is share our matrix. With that, it's for the world and for the smart financial people to decide what our valuation is. I hope that I'm not the best in deciding valuation. There are smart investors who can do that. My job is to build a good business, and the world will judge on the results we deliver in the years.
You have $1 billion in free cash available on your balance sheet, because that's massive.
Yes, we have over $1 billion of capital across our group companies in OYO right now.